Well, I think that Brazil has been a very interesting case. South Africa is another case where we know that vaccinations, even though they started, it remains at a ridiculous pace. Brazil, even though there has been some acceleration, it's a sovereign credit that continues to struggle with the fiscal aspects and the fiscal implications, right, of the need for vaccinations, of the push in capital for vaccination. So some economies, especially the fiscally constrained EM economies, and you can go to frontier to sub-Saharan Africa as well, they will be under pressure. And that's, one of the discussions I had with my clients, back last year when, I mentioned that ultimately emerging markets, many emerging markets, even some benchmark ones, they will need grants, vaccination grants from developed world and developed world economies. And I honestly believe that we are heading towards that. Many economies, they will not have the strength and the reaction function and the capital resources to finance the vaccination programs in a timely fashion. And ultimately, that might endanger the COVID stabilization in the developed world. So I do believe we are heading towards a scenario where emerging market economies will have to rely on grants and a lot of help in terms of logistics, in terms of vaccination supply coming from the developed world.
Lewis, I know a lot of emerging markets closely watching the dollar and rates at this point, and what we've seen on the rates market, fully pricing in a rate hike by the end of 2022. That's up from a fast forward from the end of 2023. We've got Fed minutes coming out later on today. At what point are you expecting to see more movement in the dollar around the yield story?
I think that the dollar has already been reasonably poorly behaved, meaning, like I said before, not necessarily a dollar that gets slapped around like it used to back in 2020 when investors made a lot of money being short dollars, long euros, long EMFX. And I think that this period is finished now. We are obviously seeing a better dispersion in terms of performance, some currencies reacting better than others. But in general, in our positioning here, we believe that dollar will gain over the next quarter, and will continue to be a euro pressure. I think that vaccination and output generation is one of the factors behind that. You mentioned the reaction in yields. This is something very important. If you believe that eventually we might even go to close to 2% in 10-year treasuries, it's even though it's a nominal interest rate story, not necessarily a real interest rate story in the US, it's very difficult to believe that risky markets and the dollar will settle around this level. So yes, we still believe in dollar appreciation in the short and medium term, eventually a fade of this move in the second half of the year, but it's not the right moment now.